Welcome to a new market update. Today we're going to speak about what are the next move in the markets, what is about oil, what's happening with oil at the end of the day, and how that's going to have an effect on our positions. And towards the end, I'm going to tell you the new entries and new positions I took. It's total 4 new positions with a very, very positive outlook. Even if war continues and remains, these positions could start printing pretty heavy. So let's start with here, as always, with the Dixie. Dixie is pretty elevated. We are above 100, which kind of sets the tone in the future for Q2. You can see here's the 100 line. As long as we stay above 100, that might tell us a lot where the Dixie and the dollar is going to stay in Q2. If we continue to stay above 100, it most likely is going to rip higher towards 103, 105, and so on. If we can't hold this level, then we might just continue below the 100 and we'll have a weaker dollar. And that's very important right now because, of course, a strong dollar promotes equity sell-off, so promotes stocks going lower, S&P is going lower, Bitcoin is going lower. So always keep in mind, if Dixie is high, then risky assets or assets in general most likely start to correct and go lower. And that's already what we're seeing in the S&P, that's what we're seeing in Bitcoin. It's also what we have seen in gold and so on. But gold is a different story. We'll speak about that in a second. And if Dixie continues to stay below the 100, then of course it will promote it a little bit. But of course there's many factors that play into the whole role of the market right now, that composes the market. At the end of the day, we have the Dixie, which is elevated because of flight to safety, right? So a lot of people are putting money into the Dixie just because of the war in general. Same thing should go for JPY, but JPY is staying pretty low. And then, of course, we have the war, right? And the war makes has the biggest impact due to oil, right? And if we go into oil, which we need to look at next to understand the market a little bit better, you see we are currently above 100 again. So same playbook kind of here with Dixie. If we stay above 100, it is not very good for risky assets like equities and stocks in general, for the S&P, for crypto. And if we can stay below, then of course it's a little bit better and stocks might do well, right? But still, even though most stocks are correcting, there's still some fundamental strong plays that you can look into, and especially what we're focusing a lot since a longer time already, but we will focus even more on is energy, right? Energy, everything that has to do with energy right now. Every ETF that combines natural gas with oil, companies like Chevron, like Exxon, in general, right? Everything that is with oil and energy is right now a hot topic, and that's what we're focusing on because these ones will continue to perform positive as long as oil stays elevated as it is right now. And even if not, the energy investment is going to be the next super cycle for the next 5 to 10 years. As you can see, if you look at the war right now, what is mainly being targeted is energy infrastructure, right? Iran is targeting energy infrastructure, and Israel is targeting energy infrastructure in the GCCs. And then the opposite way, same, right? The US is targeting infrastructure in Iran, Israel is targeting infrastructure in Iran. So they're kind of forcing themselves into a shutdown economically in that sense by forcing destruction in energy sectors, because that hurts either the West or the East the most, right? So it's more like an energy play. And if they continue to destroy their energy infrastructure, then of course these energy infrastructure plays and stocks and ETFs make a lot of sense. And one of them that I'm very long in is XLE, as you guys know. XLE is already very overbought, but it will still continue. State Street Energy selected sector includes the S&P 500 energy stocks, right? Like Chevron, like Exxon is the biggest one. Some natural gas components. So I went long into this one. About 2 weeks ago, we are currently sitting at, it corrected a little bit at a 4%, at the highest point was 6%. If you get small pullbacks, consider re-entry, but of course be careful because we're already pretty high. For us to hit C target, there's still around 20% to go, as you can see from here. If you would enter now, there's still about 22% to go. So scale in in a risk managed way, right? Like don't just drop everything into it, build your positions into it, but you can see we have normally these small pullbacks, and that's where I like to enter, right? But XLE definitely is highly on my list. And especially as long as US oil stays elevated, it's going to be very interesting, okay? Then GLNG is doing very well. Golar LNG is a gas company, so plays into natural gas. And as you guys know, Qatar exports a lot of, about 30% through the Strait of Hormuz natural gas. And we need to, of course, see how it continues with the Strait. So far, it seems like there is going to be a ground invasion from the US towards Iran, of course, to capture the critical infrastructure points like Kark Island and reopening the Strait of Hormuz and so on. So then we need to see if then energy flows again, how safe it is. But of course, it will be a very, very messy thing for the US, with maybe even allies or support from others capture the infrastructure points of Iran, because that means they need ground, they need boots on the ground, they need people there. And then, of course, Iran will heavily retaliate. So I don't know if that's going to be a safe place to continue to export and therefore import energy, right? So we need to see how that goes. But as long as oil stays high, everything basically is a sell besides energy plays, okay? Also here, look for re-entries. We are going a little bit sideways right now, so there could be a good re-entry coming up. It's doing always the same thing, basically. Sometimes you have bigger drops, so also be ready for that. We might see like a little bit of a bigger drop before we continue, because it's already standing pretty high. And we also here have a potential of another 10% easily to go, and even higher, right? So keep an eye on Golar Energy. And then when it comes to the S&P 500, as you guys know, we are in a big short. We captured a really good entry around here at 6,780. We're currently sitting at 643 or 6343. So we are around at current price 6.5% in profit. I'm going to keep this open until we hit take profit. Some of my positions already had to close because I had an option on. But yeah, again, here's of course no re-entry. Selling now makes no sense. Maybe we get a good pullback on any positive news that are short living, and then we can sell again. But I'm still heavily short on the S&P, and therefore also on most stocks, right? Especially tech stocks right now are bleeding a lot. If you look into most of the tech stocks like Tesla, like Apple, like whatever, like they're all selling off, right? So if you get entries there, you could maybe consider. Many of them already corrected heavily, so I'm not looking for entries over there. And again, we'll speak about new entries and new positions in a second. Bitcoin, same thing over here. Bitcoin flipped very bearish. Again, really big problem here is the Dixie. As long as Dixie stays that elevated and high, it smashes Bitcoin at the end of the day. And that's what we're seeing, right? So I'm looking for a re-entry in Bitcoin sell at 68768. So 68K.7. Around this area, we have the 50% correction level. EMA 200 is coming perfectly fine. I have my alarm set, and I will start to sell over here. So that's basically one trade I'm looking for, and we always put our stop loss in between 0.786 and 822 fib level. And then our C target goes to 58K per BTC, right? So that's one trade I'm looking at in the future, so be ready for that. Also, WIX stays very elevated. That's the volatility index for the S&P. So we have a very volatile, elevated market. So of course, be very careful when it comes to that. Now let's speak about metals, gold and silver, right? And then we will go into the new positions. Gold is doing pretty well. Big problem with gold at the end of the day is that all of these currencies in the GCCs, even Turkey, there was a big article about it. They are selling off some of their reserves to stabilize their currency, right? You need to understand that, especially the GCCs with the petrodollar system, where money flows from, basically energy is sold and exported from the GCCs in US dollar. That therefore, reduces the debt and increases the usage of the US dollar, which is very positive for America, which is called the petrodollar system. Maybe you want to check that out. It's interesting to understand. And that is kind of falling off right now, right? Because the GCCs are exporting Saudi, they are exporting, but they're exporting less because, of course, the Strait of Hormuz is closed. So this whole scheme at the end of the day of the petrodollar system is kind of starting to crush a little bit. You see big sell-offs in bonds, right? We're sitting at 4.4% for bonds. They're increasing. If bonds increase, that means people are selling. It's like kind of like the opposite, right? So that tells us that there is inherently a big problem in all economies right now. It seems like the gold sell-off kind of stopped so far, but we need to be very careful. Now, if you look at the chart and technically, there is definitely opportunities to buy right now. I'm slowly scaling in. I'm not 100% sure yet that we will continue a bullish trend. We need to see how price behaves over here if we don't get another big sell-off, because again, we're always at risk for big countries with big reserves, Turkey, GCCs, and so on, even India, Pakistan, all of these big nations that have big reserves in gold and silver to start selling off because of the economical downturn that we are in, because energy is just being very low in output, right? So every country needs energy, and if they have stability problems in their economy, what they're going to do is they're going to sell gold reserves, for example, right? And again, that's what we have seen in Turkey, and then also, of course, a lot of gold is stuck in Dubai in the GCCs that normally is then transferred and exported over to Asia, right? With the strait being closed. So there's a limited outflow of gold into the world. And of course, again, reserves are being sold off to stabilize economy. So that's something you need to be looking out for. But we got a bullish trend intact. I got unfortunately stopped out over here in my buy trade, a couple of pips here with a wick, but that's okay. I'm looking for a re-entry, and I already entered in gold, but in a different way, and I'm going to show you why this makes sense right now to rather prefer ETFs than the spot, right? Like not buying spot oil, not buying spot gold, not buying spot silver, but buying ETFs that concern energy and metals, right? So that's what I'm playing right now the most with call options and just like holdings. Again, one of my biggest holdings right now is GLNG. I'm currently 24% in profit. It is XLE. I'm currently 6% in profit, right? And then when it comes to especially what I just said in terms of focusing on ETFs, because at the end of the day, we could go into gold and buy gold, right? But that would be more dangerous. So I would rather go into gold miners, right? And let's speak about these new positions right now. So the first new position that we have in, and we will start with JNUC, which is basically a Direction Daily Junior Gold Miner Index Bull 2 ETF, right? So as you can see here, JNUC is basically gold miners, but it's 2 times leverage, okay? And as you can see, we are perfectly in the 50% correction level. You can see my entry over here. You can see my stop loss. So I entered in this position because I want the metal exposure, I want the gold exposure, but I don't want to go into gold spot and scale in until I'm not 100% assured that we have enough stability and the bottom actually is in metals. It looks like it, and I still am very bullish midterm and long term on metals, of course, but we need to be careful with all of the volatility and all of the sell-offs that might happen if economy continues to be unstable, right? Which it is right now, of course, right? And if even gets worse with, like, let's say, ground invasion and so on, then we could see even more issues coming up. It really depends on how fast they can reopen the Strait of Hormuz and get the energy sector running again, because that's the biggest problem right now in all the world, not only in the GCCs, not only for US, everywhere, right? Everyone needs the energy, and most countries are net importers of energy and not exports, right? And that's why they're getting slammed right now, right? And therefore they will need to sell off. So I'm long JNUC. Again, very careful in general on how I'm scaling into my positions. I'm not using the normal risk management that I usually use. I use a little bit less. I want to have more money to be ready on what is happening, right? But JNUC is one of the positions newly acquired. I have a call option. No, sorry, I have just a spot investments because it's already 2x anyways. Okay, so keep in mind this is 2 times leverage. But we can see a drop, we can see a sideways. So we're going into an accumulation phase, and then we're going to see a distribution, of course, hopefully towards the upside. So JNUC is one of the newest positions. And then when it comes to newest positions, we also added TACK. That's another stock already bought in the past, sold it again because we started to drop, but bottom seems to be in. We touched the 50% correction level, saw a big increase and bullish volume, which is very, very good. So I entered over here. Stop loss again is at 34.25, same Fibonacci level. And TACK is also a mining company, but it combines gold and silver and some other copper. So it's, again, a little bit more diversified, not only on just one asset, and that's exactly what you want to do, okay? So TACK, I have a call option and I have spot investments in TACK. It's a ETF, it's a mining company, so a stock company at the end of the day, okay? So second position, TACK after JNUC. So these are the 2 that go into the metal place long term, okay? Besides that, there's one spot that I bought, and that is Platinum, right? Platinum had a very nice correction. Touched the 50% correction level. We got a nice bullish spring over here in this area. I like to see that, especially in a traditional barrier that is bullish. And from now on, we're going a little bit sideways. My entry is just right here. And stop loss continues the same as in all of the other positions in between the 0.78 Fibonacci level and 822. So sitting at 1,205, okay? So that's the only metal play I'm really in terms of spot, okay? And as you can see, it is a very, very good setup. Just because we're also touching the EMA 200 over here in the daily. So we have strong support coming in, and we can see price reacting to that, right? So that's the third position that I have open. Here you can decide, do you want to do leveraged or not? Do you want to do call options? I have a call option and I have 2 times leverage on that. These are my 2 positions on Platinum, right? After that, we have a stock that you already know that had a big sell-off. We made a lot of profit. We closed our position is CRCL, right? And that's the only tech stock in that sense I'm buying right now. All the other ones I'm leaving to see how the market continues. But CRCL corrected around 50%, a little bit more, is in the buying area. We are seeing some slowdown, right? Which that's what we want to see. We want to see a dynamic shift because we had a big drop. We're struggling a little bit, but let's see. If you especially go into Cheddar Flow, which I love to use, and you put in CRCL, you will see there's actually more bullish volume coming in. Yesterday alone, we had 1.8 million call flow to 408K put flow, right? And the days before looked pretty similar. So that's very positive for me to scale into a stock position to see that there's actually more bullish volume, of course, coming than bearish volume, okay? So as you can see, I have a call option and I'm holding spot, and I might put more money in depending if we start to react and have a dynamic shift. It's maybe a little bit of an early entry. In the 30-minute chart, we could start to look for better entries in the sense of if we see more stability. This stability level hasn't held. You see we broke below. We're seeing now a bullish candle again. So it depends a lot, but CRCL in general, I love it. It's an insane play if you actually do some research. I already have explained it many times. They are the company behind USDC crypto. So if you think of the most profitable company in the world, it is USDT, and USDC is being used way more volume. So I think this has a very, very great future. But as everything is selling off because of a risk-off event regarding the war, right? People are being very careful. So we had a big sell-off after an insane run through the war time, right? I mean, war started somewhere over here, and we had a somewhere like 140% up, right? And we catched most of it in 2 positions. So that is insane. So that's why I love to re-enter this position. Okay, so CRCL, new position, TACK, JNUC, and then Platinum. These are the only new positions that I have. Besides the ones that I'm holding is FLNG as the gas play. It's behaving pretty okay. Let's see how it continues. My stop loss is pretty tight. So if it stops out, I will continue to see. But FLNG, GLNG, as I just said, right? We just spoke about that. We hold this position since a longer time. Then we have JNUC as a new position. We have uranium, which is a more long-term play, is getting now, or has a lot of trouble to really get up. Why? Because of course, with all the elevation in oil and so on, in general, it's just a little bit more of a risk off. But long-term, I still believe very much in this position, okay? Then we have TACK, we just spoke about that. We are in oil because we are in XLE, right? XLE includes Chevron and Exxon, right, as the biggest part. And then we have XLE, we just spoke about it. And then we have XPT as a new position. And then on the stock side, we have CRCL as a new one. And all the other ones are remaining in drawdown so far. But that's okay because these are running out options towards the end of the year, okay? Anything new I will do, I will update you guys. Make sure to follow my Instagram account about trading. It's in the description below. I'll do market updates on a daily basis. Every day from Monday to Friday, I do a market update with new positions, what is happening on the current positions. But so far, the playbook is pretty clear. We are very bearish on everything besides energy and besides metal. But metals, we are a little bit more neutral to bullish. Not fully bullish like on energy, just because we need to see if the bottom is actually in, and that's why I'm not scaling into direct positions in gold, but I'm scaling more into miners. And many of these miner stocks have corrected heavily, right? If you check just some that are on my list here, we have, for example, the Franco-Nevada Corporation is close to 50% re-entry. GDX, which is basically Van Eck Gold Miners, has dropped a lot and is approaching a very interesting zone here. This trend continuation at 0.8 fib level. Let's see. So if I take the fib level, yeah, we're already on it close to 0.382, which is a strong trend continuation. And as you can see, it's holding up very well, okay? Then we have GLD, which is gold shares. Same thing over here. We have a bearish sequence, so I'm going to continue to look at this one. And then we have, of course, Sprott, right, which is one of the biggest gold holders. Physical gold holders, right, which is still holding up insanely well, right? So if we get a re-entry here at the 0.38 trend continuation would be very nice. That's why I have my timer over here, or basically my alarm, just waiting for this position. And besides that, again, I'm not looking into anything else. Of course, if there's a if there is a probability of this war ending soon and it actually being stopped completely with peace agreements whatsoever, then the market will be very, very interesting and there's much more to buy. I have a lot on my list that I want to buy for the future where we're getting insanely good prices. But as long as there's no sign of the war ending, it doesn't make sense to buy, because it just might continue to drop and even become heavier, especially if you look at the S&P 500, how it's behaving. It's not very good. We are continuously just dropping every day. We open, we drop. Sometimes we open a little bit higher, we continue to drop. So that's not very, very positive, right? Big problem, again, to sum it up, is oil. If oil stays high, inflation increases. If inflation increases, they need to increase rates. If they increase rates, the dollar goes higher. That's not good for stocks, right? That's not good for risky assets. So right now, energy long, metals neutral to more positive, and the rest just selling, right? So if you get sell entries in anything, in stocks, tech stocks, and so on, I pretty much would take it. But of course, being careful in general with all of these positions, okay? That being said, guys, again, make sure in the bottom below, in the description, there's my Instagram trading account. There's also my normal one. Follow them because I update on a daily basis. And with that being said, we see us on the next one. Ciao, ciao.